investors took the stand of profit-taking following a spike in rates on the newly issued one-year Treasury bills to 20%. Traders at Access Bank expect the bearish sentiment to persist today as market participants seek funding for the upcoming CRR maintenance. Ladi Belo, the head of fixed income at Access Bank, joins me now for a run-through on the markets this week. Thank you so much for your time, Ladi. And let's start with the key highlights of the market this week. What were some of your major highlights?
Hi, good afternoon, Ken. Thank you for having me. So like we rightfully mentioned, we expect some bearish sentiments in the market. And this is largely exacerbated given the CBN's OMO auction that was floated yesterday, where a total of 252.9 billion was sold across board. Emphasis was on the long end. There was no sale on the short and medium tenor securities, given the no interest from local and offshore counterparties on these two maturities. But we saw the long end trend up by slightly over 250 basis points from the preceding auction to close at an all-time high of about 24.36% levels. So given the change in CBN policy levers that we witnessed early in the week, we've seen this transmit in the markets in the form of an OMO auction, and this essentially has taken our rates incrementally upwards across both the T-bills and FGN bond space.
But Ladi, in terms of how investors are looking at this, how would you say this auction compares to previous auctions, and what's the likelihood for the forthcoming auctions then?
Please repeat that.
Just your take on how this current auction compares to previous auctions, and what your expectations are for further auctions down the line.
Okay, for the FGN bond auction that was conducted on Monday and settled on Wednesday, we saw weak appetite from the local counterparties in the market, given the offer size of 70 billion on the 29s, 50 billion on the 2031 instrument, and 30 billion on the 2033. We still saw significant appetite on the 9-year reopening, which is the 2033 maturity, albeit with a slightly lowered appetite from the preceding auction. And we expect this pace to be the trend going into the next auctions, given that the CBN has continued its hawkish stance and wants yields relatively elevated to combat inflation within the secondary and primary markets that we trade in Nigeria. In addition to this, their policy levers were also heightened, given that there's some disruptions in terms of agricultural produce from floodings in some parts of the country, as well as the increase in PMS prices. And this would also be exacerbated by the increase in minimum wage, which will kick in the base effect within the next couple of months. So we expect this hawkish stance by the CBN to dictate the pace of our markets going forward. And we still should see trading at slightly elevated levels in the market. As the CBN governor rightfully said, he's trying to close the gap with real returns. That's the differential essentially between our yields and inflation. And he's done a pretty good job doing that. When you look at the world or what's happening globally, we're seeing some easing, especially in the West. We've seen the US cut rates by 50 basis points, but we've done essentially the opposite. So our NPR currently stands at 27.25%, which is a 50 basis points hike from the preceding MPC. So we'll continue to see towards the end of the year this hawkish stance being dominant in the markets, and which would essentially feed into our yields within the primary and secondary market space. We also saw that reflect in the auction, the NTB auction that was conducted by the DMOS on Wednesday, where we saw the rates on the 1-year maturity clear at 20%, coming from the 18.59% levels at the preceding auction. Despite the lack of changes in the 91 and 182-day rates, this is fairly inconsequential, as the 1-year rates dictates the pace of the secondary market rates in the market.
So let's get to the area of liquidity now, and I'd like to get your outlook for next week. Earlier you mentioned the CRR maintenance and also the bond and OMO auction debits, and speak to how this also will color liquidity going down the line.
Right, so we had the system at about 450 billion yesterday, but we've seen this inch up again today, despite the OMO debits, which were passed yesterday in the markets. This can be attributed to some of the interventions by the CBN, especially when you look at the Sukuk 2024 that matured and some of the coupons that we expect to be paid in, and which will continue to be paid in even into next week. So we expect to see liquidity in the system wane, especially the 500 basis points increment for deposit money banks, So we expect to see that filter into the market in the form of continued CRR debits, which we expect the CBN to start queuing as early as today. So essentially across board, we should expect a total of 1.5 trillion leaving the system. And the pace of this debit from the CBN would essentially be determined by them. So we expect market to continue to be tight leading through till the end of the year, as long as this hawkish stance is continued by the Apex Bank.
All right, Ladi, but in one sentence, we're fast running out of time here, but in one sentence, how would you assess the performance of the third quarter so far?
So far, we've done a fairly decent job in moderating rates, albeit with a bit of depreciation across the Naira, given the excess supply against the demand in the market, but it's been fairly decent. When you check out the pace of borrowing by the DMO as well, they're up to date. Also, we haven't seen the results from the USD dollar bond, that USD local bond that was issued by the DMO, but we expect to see an oversubscription. Maybe not 2 times oversubscribed, but definitely 1.5 times oversubscribed, which would also ease the level of borrowing that is required towards towards the end of the year.
All right, then. Thank you so much for your time. That was Ladi Belo, the head of fixed income at Access Bank.